Hello and welcome back to Homestead Road Weekly News. I'm Devin Walton, your expert here at Homestead Road. This week we're focusing on federal real estate developments from September 7th through the 12th. Now these stories matter because what happens at the national level trickles down directly and shapes our market here in Minnesota. It also spreads out across the entire country. We're going to cover mortgage rates hitting 11-month low, the jump in buyer demand, a new federal rule for cash real estate deals, updated census data on affordability, and finally, a renewed push from Washington to expand home ownership. So stay with us, and if you haven't already, hit that subscribe button so you don't miss any of these weekly updates. Let's dive in. So for our first story, let's start off with some really good news on mortgage rates. For the first time in almost a year, the average 30-year fixed mortgage rate dropped to about 6.4%. The 15-year fixed mortgage rate came down to around 5.5%, and these are rates proposed by the Mortgage Bankers Association. That's the lowest that we have seen since October of last year. Now for home buyers, that means lower monthly payments, and in many cases, the difference between qualifying for a loan or being priced out of the market entirely. Now for homeowners, especially those who bought in the last 2 years, it might mean an opportunity to refinance and save a little bit of money. But here's the reality. Even with these lower rates, affordability is still stretched very thin. Home prices haven't come down significantly in many markets. Now here in Minnesota, we are seeing price drops on a routine basis, especially in those upper bracket prices. Overall, however, prices are still on the rise. So while rates are dropping, it doesn't mean homes are suddenly affordable overnight for everybody. My thought here is think of this drop as a little breathing room. It doesn't solve the affordability crisis, but it helps families stay in the market. So if you've been watching mortgage rates closely, let us know in the comments what rate would make you more comfortable to buy again. And don't forget to subscribe. We'll track these shifts week by week. Well, story 2 is really about those lower mortgage rates, and they're already having an impact. Mortgage demand has jumped to its highest level since 2022. Applications for both new purchases and refinances are climbing, and that tells everybody that buyers are paying attention and acting quickly when the market gives them an opening. Refinancing is especially interesting here. Families who locked into those 7% or even higher rates just a year ago are now seeing some real savings by refinancing into a lower rate. That can mean hundreds of dollars back in their pocket each month. And when households free up that money, it often flows right back into the economy and the local community through consumer spending, local businesses, and other investment vehicles. For buyers, it signals renewed competition. The more people who re-enter the market at the same time, the more competitive bidding gets, especially in markets with already low inventory. Now again, this isn't a housing boom, but it could be a turning point for that market. When buyers and refinancers return in numbers, it changes market dynamics very quickly. So if you've refinanced or considered refinancing recently, how about sharing your experience in the comments? Give this video a thumbs up so more people can get these insights and learn from your experiences. In our third story today, let's talk about compliance. The U.S. Treasury's Financial Crimes Enforcement Network, or better known as FinCEN, has finalized a new rule aimed at all cash residential real estate deals. Now here's what it means. If a purchase is made using an entity like an LLC or a trust, the title company will be required to report the true financial beneficial owner of that entity. No more hiding behind shell companies. If you're an individual paying all cash without an entity, this won't affect you. But for investors using legal structures, the change is significant. The rule takes effect December of 2025, so the industry has a short window to prepare. Why does this matter? It's all about transparency. The government wants to prevent money laundering and foreign investors from pushing money into the U.S. housing without accountability. It could slow down high-end purchases in particular, and it might add paperwork to closings across the country. My expert thought here is this rule is about shining a light on deals that were once invisible. It makes the system safer for everyone, but also more complex for some buyers and sellers. Now, if you work in real estate or lending, what do you think of these new reporting requirements? Are they necessary? Comment below and make sure you're subscribed for more updates on compliance changes. In our fourth story today, let's talk about affordability. Now, according to new Census Bureau data, both homeowners and renters are spending more, while wages are not keeping up. In 2024, the average homeowner paid about $2,035 per month for housing. That's up sharply from previous years. Renters saw a 4% increase on average, which may not sound huge, but when rents were already high, that bump is painful. The real issue is not that incomes are not rising at the same pace. Families are spending a larger share of their paycheck on housing, leaving a lot less for savings, education, or even emergencies. And for first-time buyers, saving for a down payment becomes harder than ever. Even with slightly lower mortgage rates, this gap between wages and housing costs means affordability remains the #1 challenge. My thoughts here are this is the core of the housing crisis. Rates move up and down, but unless incomes grow and supply increases, affordability will stay out of reach for many, many families. So if affordability is the biggest challenge for you, let us know in the comments below and subscribe to get our weekly breakdown of what is driving these costs. Our final story brings us back to Washington. At a HUD event this week, the administration laid out its renewed commitment to increasing homeownership. Proposals include zoning reform to allow more housing to be built, reducing closing costs to make transactions easier and more affordable, and supporting innovative building methods in modular homes and 3D printing. These ideas sound promising, but as always, the question is follow through. Will Congress support these initiatives? Will local governments actually change zoning laws and allow certain things to happen? And will lenders adapt to new forms of construction? Still, the fact that home ownership is a top federal talking point means we can expect more programs, pilot projects, and potentially new incentives aimed at builders and buyers. Expert thought here is policy ideas can look good on paper, but they only matter if they're implemented. Watch for test projects in cities willing to innovate. Do you think federal policies like zoning reform or 3D printing will actually make housing more affordable? Comment your thoughts. Be sure to subscribe so we can keep you updated, and these initiatives, as they roll out, will be followed here. Well, that's it for this week's Homestead Road Weekly News. We've covered the national trends from mortgage rates and demand to new compliance rules, the affordability crisis, and a renewed federal push for homeownership. I'm Devin Walton here at Homestead Road. I'll be here with you every week and bringing you all the latest insights into the real estate market, both federal and local. So if you found this useful, like, share, subscribe, and don't forget to comment with your thoughts. We love hearing from you and what's happening in your world. We'll see you next time.